Welcome. Today, we're going to take a deep dive into the Canadian income tax system. Our goal is to demystify it completely. We'll follow the journey of your money, right from the moment you earn it all the way through to filing your taxes. By the end of this, you'll have a really solid, foundational understanding of how it all works.
This guide has been carefully prepared to give you clear, academically sound insights into the core principles of Canadian taxation. You know, these topics can seem really complex, but by breaking them down, we'll give you the tools to handle your own financial obligations with a lot more confidence and clarity.
So, let's kick things off with a question that I'm sure every single one of us has asked. You get that job offer, and you see that big salary number, right? But then, when your first paycheck actually hits your bank account, the amount is, well, a lot less. It's a common experience, and it can be a bit of a shock. So, where does that money actually go? That's the discrepancy we're here to investigate and fully understand today.
To get to the bottom of this, we're going to follow a very clear and logical path. We'll start with the absolute basics, the language of tax. Then we'll get into the differences between the types of income, learn how to read your tax documents, and break down your paycheck line by line. After that, we'll get into some strategy, how you can lower your tax bill, and even how you can earn some income completely tax-free.
All right, let's jump right in. You know, to really understand any system, you have to speak the language. So we're going to start by defining some of the key players and the essential terms that you're going to see over and over again on your tax journey.
First up, the big one, the Canada Revenue Agency, or as you'll almost always hear it called, the CRA. This is the government body at the center of it all. Their job is to administer the tax laws for the federal government and for almost all the provinces and territories. But they do more than just collect taxes. They're also responsible for delivering a lot of the social and economic benefits that Canadians rely on.
Now here's a word that can make people a little nervous, audit. But really, its purpose is quite simple. It's all about verification. An audit is just a formal review by the CRA to make sure that the information you've provided on your tax return is accurate. Now, what might trigger one? Well, sometimes it's a discrepancy, maybe some unusually high deductions, but honestly, it can also be just part of a random check. It's all designed to keep the system fair and make sure everyone is participating correctly.
After you file your tax return and the CRA processes it, they'll send you a document called a Notice of Assessment, or NOA. I can't stress this enough. This document is incredibly important. It's the CRA's official summary of your tax year. It tells you if you're getting a refund, if you owe more money, or if you're all square. And just as importantly, it tells you your updated contribution limits for your RRSP and TFSA. You absolutely need to keep this document in a safe place.
Okay, now that we've got the basic vocabulary down, let's build on that. One of the most common points of confusion is the idea of income itself. You see, when it comes to taxes, not all income is viewed the same way. So let's break down the three key types of income that you'll be dealing with.
The first and most fundamental difference to understand is between gross income and net income. Think of gross income as the top line number. It's the total amount of money you earn from every source before anything at all has been taken out. So if your salary is $60,000, that's your gross income. Net income, on the other hand, is what's left over at the very end, after all the deductions like taxes and pension contributions are gone. I like to call it your fishing net income. It's what you actually get to catch and keep.
This table here does a great job of showing the flow. We start up top with gross income. That's everything, the whole pot. A big piece of that is earned income, which is what you get from your job. But here's a key piece of information. You don't actually pay tax on every dollar you earn. There's something called the basic personal amount, which is a tax credit for everyone. For 2023, it was about $15,000. That means the first $15,000 you make in a year are essentially tax-free. Pretty great, right? So after we factor that in, we take our gross income and subtract all those mandatory deductions, CPP, EI, and taxes. What we're left with is our net income. And that final number is super important because that's what the government uses to calculate your eligibility for various benefits.
All right, so to really get a handle on your taxes, you have to get comfortable with the paperwork. Think of it as a paper trail that tells the complete story of your income and your contributions over the entire year.
Sometime around February or March, you'll start getting these information slips in the mail or online. We call them T-slips. The most common one by far is the T4, which is for your employment income. If you're a student, you'll also want to look out for a T4A for any scholarships you received, and a TD 2202 for your tuition. I also want to mention the TD1 form. This is something you fill out when you start a new job. It's where you claim your tax credits, which helps your employer figure out how much tax to take off each paycheck. If you fill this out accurately, you can avoid having way too much tax taken off during the year.
Let's zoom in on that T4 slip for a second, because it's so important.
There are two boxes you really need to pay attention to. Box 14 shows your total gross income from that job for the whole year. Then you have Box 22. This shows how much income tax your employer has already taken off your pay and sent to the CRA for you. Let's say Box 14 says you made $60,000. And after you do all your calculations, you figure out you owe $10,000 in tax. But then you look at Box 22 and see that your employer already deducted $11,000. Well, that means you're getting a $1,000 refund. These two boxes are really the heart of your tax return.
So you have to remember that T4 slip is just a summary for the whole year. The real story unfolds with every single pay stub you get. Your pay stub is like a detailed running report card for your earnings. It shows you exactly where every single dollar from your gross pay is going. This sample pay stub is a perfect illustration. You see the gross pay for the period is $1,725, but you don't get to keep all of that. First, we subtract the deductions. In this case, $32.78 for employment insurance, almost $100 for the Canada pension plan, and just under $300 for income tax. That adds up to $430 in total deductions. So the final net pay, the actual take-home amount, is $1,295. That's the number that will land in your bank account. Now, let's look a little closer at those two big deductions you'll see on every single paycheck besides your income tax. I'm talking about employment insurance, or EI, and the Canada Pension Plan, or CPP. These are not optional. They're mandatory contributions that serve very specific and very important purposes. Employment insurance is basically a giant safety net that we all pay into. The small amount that comes off your paycheck goes into a fund. That fund is then used to provide temporary income support if you find yourself unable to work. Maybe you lose your job, you get sick, you have a child, or you need to care for a seriously ill family member. It's there for those critical moments in life. The Canada Pension Plan, or CPP, is a totally different thing. You can think of it as a mandatory retirement savings plan. Every time you get paid, you're forced to save a little bit for your future self. All those contributions build up over your entire working career, and then, when you retire, you get a monthly pension payment from it. It's designed to replace a part of the income you were earning while you were working.
Okay, so we've covered how you earn your income and what gets taken out. Now let's shift gears and talk about strategy. Let's talk about how you can legally and effectively reduce the amount of tax that you owe by using what are called deductions and credits. Now, it's really important to know the difference between a deduction and a credit. A deduction, like for childcare expenses, actually lowers your total taxable income. So if you're in a 30% tax bracket, a $1,000 deduction saves you $300 in tax. A credit, on the other hand, is even better. It reduces your final tax bill dollar for dollar. The government offers credits for things like making charitable donations or supporting a dependent. Knowing the difference between these two is absolutely essential for smart tax planning.
And that brings us to my favorite part. Beyond just lowering your tax bill, there are ways in Canada to receive money that is not taxed at all, not 1 cent.
And honestly, this is such a critical concept if you're trying to build wealth. I'm talking about entire categories of money that you can receive that you don't even have to report on your tax return. It's completely 100% yours to keep. And the sources are pretty diverse. Things like lottery winnings, for example, are tax-free. Most gifts and inheritances you receive are also not taxed. Government benefits like the Canada Child Benefit don't count as taxable income. But from a financial planning perspective, the single most powerful tool on this list is the tax-free savings account, or TFSA. Any money you make inside a TFSA, whether it's from interest, dividends, or selling an investment for a profit, is completely tax-free, forever. It is an unbelievably powerful way to grow your wealth over the long term. So, there you have it, the full journey, from your gross pay, through all the deductions and credits, and all the way to tax-free income. Understanding this process gives you real power. It means you can stop being just a passive observer of your finances and become an active, strategic manager. The next step, of course, is to take this knowledge and apply it to your own situation.